Hi, everyone. This is Hunter Satterfield, one of the partners here at Kane Waters, as well as a member of the investment committee here at Kane Waters. This is your monthly market update for the end of June. I'm joined, as always, by Brad Sanders, who is the managing director of Tectonic Advisors, and then also Brian Bortz, who is the head of our investment committee and also one of my fellow partners here at Kane Waters. For the month of June, domestic stocks were up right around 2%. Global stocks were up just above 3% for the month. We'll talk about some of the volatility for those here in just a second. Both domestic and global bonds were up right around 0.5% to 1% for the month. Now, on our market update for May, we talked about the volatility that we expected to continue and persist really through the remainder of the year. And we'll talk about some of the reasons for that. I did want to start with talking about some of the intra-month swings that we saw for the month. If you take week by week, we saw the first week of June be up right around 5% for stocks. The second week be down right around 4.5%. Then we saw another up week of 2%, and then another down week of 3%. And so we see the month somewhere around 2 to 3%. But if you're not watching that volatility that's occurring, which is very atypical for a healthy market, it's certainly something that you want to focus on, when we're sort of talking about what is happening in the economy and the market at large. So Brian, can you talk a little bit about what is creating that continued volatility that we've been talking about that we expect?
Yeah, I mean, the market absolutely hates uncertainty and any form of uncertainty. And right now I think we've said the word spike more than we've probably ever said in our lives, but with the current spike in COVID cases here in the last couple of weeks, I believe that people are scared that the economies are going to shut back down again. And because of that, the market is nervous. And there's a lot of uncertainty, and uncertainty leads to volatility. The bright point as it relates to Kane Waters portfolios, in my opinion, and Brad, you can speak to this whenever you're ready, but my thought is that our volatility has been much lower than the overall market in general, which is great. But the fact is that we're going to see these wild weekly swings and wild daily swings until the market feels safe and comfortable again, and that's going to take several months.
Yeah, I think some of the key sort of things about uncertainty we're seeing actually are going to be approaching here at the end of the month. So, some of our viewers might have heard sort of the term starting to be thrown around of a looming fiscal cliff coming at the end of July. And that is something that I want Brad to speak to a little bit. I mean, the idea there is that the pandemic unemployment assistance that was provided as a part of the CARES Act, it's that $600 a week in addition to normal unemployment. That money is due to run up at the end of July. And so, many are starting to talk about this sort of fiscal cliff that's coming. Brad, can you talk a little bit about both what we've seen from a retail number perspective, jobless claim perspective, during the provision of this extra $600 and why that's creating sort of fear and concern and uncertainty if that does not get extended after July 31st?
Yeah, absolutely. So I think that's part of the disconnect with why we continue to talk about how the market has kind of disassociated itself from the actual economic situation. And I think what was lost is when you mention that $600 a week and there's 40 plus a million Americans getting that, it's estimated 2/3 of those people receiving that. That's actually more money per week that they're receiving now than they were when they were employed. So what we've seen from a retail standpoint is you've actually seen spending numbers actually remain, kind of where they were. They're not as bad as you might expect. And it's because they're actually giving people extra money. And 72% of the GDP annually in the United States is consumer spending based. And so that fiscal cliff is pretty treacherous because if we get through July and they haven't extended this in some manner or they lower it, that's going to show up in the economy very, very quickly because that's going to impair the spending ability of consumers. And there's just too many of them, and it's a huge number. And so that fiscal cliff is pretty deep and treacherous. So we're watching that very closely. I fully expect them to extend it or at least to to offer something else up. If it's lower, though, I would expect that to fuel further volatility, even more than we've seen lately. I just think that's too important. That's been kind of the one key cog in this whole thing that's kind of kept everything afloat and not as horrible as we would all maybe expect it to be when you look at the data.
I think that's the thing, because obviously I agree to a certain extent. Obviously, we are now finding out that PPP loans have been extended. Those were set to expire, or I should say that the lending opportunity was set to expire on June 30th. So that's now been extended beyond that. And so also, yeah, I would say that we're expecting something to sort of be pushed out, because really, as we near the end of the year, we're still talking about an election year, right? So we're still talking about the uncertainty that not only comes with the fact that COVID is changing by the week, but also that we've got an election year on our hands. And so I think, the messaging from us is continued volatility. But if you pull back and look at the overall month, you see a positive month, and it could very easily have been down as well. And I think that continues to be the mantra for investors: is pull back and look at the broad scope of things. Set your allocation for long-term, returns and long-term expectations, and don't get too focused on the volatility that is there from week to week or even month to month. So thank you both for joining me today. We will be back in front of you with a monthly update as of the end of July, hopefully with some changes that we see with this impending fiscal cliff as well. So thank you so much, and have a safe July.